Exploring earnings accretive investment opportunities, maximizing earnings through strategic investments. Presentation overview. Understanding earnings accretion. The presentation will begin by discussing what earnings accretion is and how it is measured. This will provide a foundation for understanding the different types of earnings accretive investments. Types of earnings accretive investments. This presentation will cover various types of earnings accretive investments, including mergers and acquisitions and share repurchases. This will help in determining which investment opportunities are the most suitable for the business. Evaluating earnings accretive investment opportunities. Presentation will conclude by discussing how to evaluate earnings accretive investment opportunities. This will help in determining whether an investment opportunity is worth pursuing or not. Understanding earnings accretion. What is earnings accretion? Earnings accretion refers to the increase in earnings per share as a result of a specific investment or business strategy and how it can be used to evaluate the financial impact of such strategies. Difference between accretion and dilution. Earnings accretion is the increase in earnings per share, while dilution is the decrease in earnings per share that can result from an investment or business strategy. Measuring earnings accretion. Earnings accretion can be measured by comparing the EPS before and after a particular investment or business strategy and calculating how much the EPS has increased as a result of the strategy. What is earnings accretion? Earnings accretion is the increase in earnings per share resulting from a particular investment or business strategy. It is often achieved through measures such as increasing revenue or reducing costs. How is earnings accretion measured? EPS before and after investment. One method to measure earnings accretion is to compare the earnings per share before and after the investment. If the EPS increases after the investment, then the investment is considered to be earnings accretive. Incremental EPS calculation. Another method to measure earnings accretion is to calculate the incremental EPS resulting from the investment. This method takes into account the impact of the investment on the company's overall EPS and is a more precise measurement of earnings accretion. Types of earnings accretive investments. Mergers and acquisitions. Mergers and acquisitions involve combining two or more companies to create a larger, more competitive entity. While this type of investment can lead to increased earnings, it also comes with risks such as cultural differences and integration challenges. Share repurchases. Share repurchases involve a company buying back its own shares, which can increase the value of remaining shares and boost earnings per share. However, this type of investment can also be risky if the company overpays for its own shares. New product development. New product development involves creating and launching new products or services to increase revenue and earnings. While this type of investment can be risky due to high failure rate of new products, it can also lead to significant growth and profits. Merger and acquisition. Mergers and acquisition can provide a variety of benefits to businesses, including increased market share, economies of scale, and access to new markets. However, there are also many challenges that come with mergers and acquisitions, such as integration difficulties and cultural differences between the two companies. Share repurchase. How share repurchases work. Share repurchase is a process in which a company buys back its own shares from the market. This reduces the number of outstanding shares, which in turn increases the earnings per share and the share price. Benefits of share repurchases. Share repurchases can provide several benefits to a company, including an increase in earnings per share, an increase in share price, and a reduction in the number of outstanding shares. Potential drawbacks of share repurchases. Although share repurchases can provide benefits to a company, they can also have potential drawbacks, including a reduction in cash reserves, a decrease in investment opportunities, and an increase in debt. Evaluating earnings accretive investment opportunities. Assessing earnings growth potential. Evaluating earnings accretive investment opportunities requires an assessment of the potential earnings growth and the cash flows generated by the investment. This assessment should be based on a thorough analysis of the company's financial statements, market trends, and projections. Assessing cash flows. In addition to assessing earnings growth potential, investors should also evaluate the cash flows generated by the investment. This includes analyzing the company's cash flow statement, evaluating the quality of its earnings, and projecting future cash flows. Other considerations. When evaluating earnings accretive investment opportunities, investors should also consider other factors such as the company's management team, competitive landscape, and regulatory environment. Earnings growth potential. Evaluating earnings growth potential requires thorough market research and analysis of competition, growth prospects, and financial metrics. Key metrics to consider include revenue growth, net income margin, and return on equity. Cash flow analysis. Cash flow generated by investment. Cash flow analysis involves assessing the cash flows generated by the investment over a specific period of time and projecting the returns based on the investment plan and objectives. Evaluating cash flow analysis. To evaluate cash flow analysis, it is important to look at the net present value, internal rate of return, and payback period of the investment to determine its profitability and feasibility. Conclusion. Earnings accretive investments. Earnings accretive investments are a powerful tool that can help companies boost their earnings and drive growth. These investments have the potential to create value over time and can help companies achieve long-term success. Types of earnings accretive investments. There are different types of earnings accretive investments that companies can make, including mergers and acquisitions, strategic partnerships, and new product development. Each type of investment has its own set of risks and rewards. Evaluating earnings accretive investments. To evaluate earnings accretive investments, companies need to consider a variety of factors, including the potential for earnings growth, the risks associated with the investment, and the impact on the company's overall strategy. By evaluating these factors, companies can make informed decisions about which investments to pursue. Thank you.